Welcome back. In our top business story, Dubai Exports, an agency of the Dubai Department of Economic Development, is expecting more UAE companies to increase their trade and presence in South America's powerhouse, Brazil. This comes after the DED recently completed a trade mission to Sao Paulo and Rio de Janeiro, with more than 15 UAE companies participating. Trade between the two nations is expected to grow in the coming years, particularly in the finance, construction and retail sector. In total, non-oil exports from the UAE to Brazil in 2010 added up to 365 million dirhams. Meanwhile, the value of exports and re-exports by all the members of the Dubai Chamber of Commerce and Industry reached 120 billion dirhams during the first 6 months of this year, an increase of 16.5% compared to the same period in 2010. Telecom operator Du raised its second quarter net profit by 51% year-on-year to just over 207 million dirhams. Total revenues for the quarter rose 28% to 2.2 billion dirhams, while revenues from its mobile division even showed more momentum by 32% to 1.7 billion dirhams. By the end of Q2, Du had approximately 4.7 million mobile customers. More than a quarter of the growth in mobile revenue can be attributed to an increase in the average revenue per user, driven by increased usage by Du's customers. The company's CEO Osman Sultan said in a statement to the Dubai Bourse. However, cost of sales increased 25% to 719 million dirhams. That was more than analysts expected. Abu Dhabi Commercial Bank swung to a second quarter net profit on Tuesday as it booked a $357 million gain from the sale of its 25% stake in Malaysia's RHB Capital. The UAE's fourth largest lender by market value earned 1.3 billion dirhams or $366 million in the second quarter, a bit above expectations, the bank said in a statement after the market closed yesterday. In Q2 last year, there was still a loss in the books of 531 million dirhams. ADCB sold its stake in the Malaysian lender RHB as it wants to focus on its operations in the UAE. The shares are trading higher on those news, also due to the bank saying it would convene a shareholders meeting to buy back up to 10% of its shares. Speaking of stocks, equities in the UAE ended mixed today. In the GCC region, only the ADX bucked the downward trend. World business news. Stock markets all around the world extended their losses today despite the two U.S. rating agencies, Moody's and Fitch, confirming the U.S. top-notch AAA credit rating. Both confirmed the rating late on Tuesday after the Senate, by a vote of 74 to 26, approved the $2.1 trillion deficit reduction plan to avoid a debt default. However, Moody's said additional deficit reduction measures are needed for the government to retain the coveted rating. It put down its foot and assigned the U.S. a negative outlook to its AAA rating. And also smaller rival Fitch did not rule out slapping a negative outlook on the rating. Now investors await Standard & Poor's reaction. Meanwhile, investors flee in safe haven assets such as gold. Bullion reached a new record high today of $1,671 an ounce. There is still a lot of uncertainty concerning the U.S. debt problem, and also the markets turn their attention back on growth. Last Friday, U.S. GDP figures disappointed, as did the manufacturing ISM index, which fell to a 2-year low. And U.S. consumer spending unexpectedly fell in June for the first time in almost 2 years. We asked Philippe Dauba-Pantanacce, senior economist at Standard Chartered Bank, what he thinks the spending cuts will affect the already fragile U.S. recovery.
Probably the concern now are going to switch to the growth figures coming out of the U.S. Last Friday, the Bureau of Statistics in the U.S. revised down drastically the growth figures, both for 2008-2009, which showed a much deeper recession than previously thought, but also figures for this year, Q1 and Q2, which drastic cuts, especially for the first quarter, with figures revised down from 1.9 to 0.4. So I think that a lot of the market participants are going to start to worry a lot to see where are the growth drivers going to come from in the upcoming month. And in terms of the debt ceiling vote and the agreement that has been voted in Congress, I don't think that we should expect a lot of, or that we should have a lot of worries coming from that precise agreement, in the sense that the spending cuts have been backloaded. So in the upcoming month, no major cuts should come from this agreement. But really the worry is that the economy hasn't bounced back despite major stimulus package. So going forward, the market participants will be very worried, and more volatility will arise from that.
After an emergency meeting, financial authorities in Italy said that its financial system remains stable despite market tensions caused by spiking bond yields. Italian 10-year bond yields soared to record levels of above 6%, with the spread against the German benchmark Bund also seeing all-time highs. 6% and above is a level generally seen as unsustainable in the long term. Prime Minister Silvio Berlusconi therefore today spoke to Parliament to try to calm fears of the escalating market turmoil that has brought Italy to the edge of a Greek-style financial crisis. Before we go, here's a quick overview of the oil and currency markets, and after that, we have the day's sports news for you.